Hi, I'm James Robinson, and this is my stock pick of the week. This is part 2 on my analysis of the company Valu, symbol VALU. This time we're going to talk about the company's operations. So I've recently done a video on gross margins and why I always start my analysis looking at gross margins for a company. So if you're interested, feel free to check that out. But we're going to look now at the gross margins for Valu. What you're going to see is that the company was in a long period of decline from 2011 to about 2016. You saw those margins getting eroded away, and you know that to me is a sign that they're losing their competitive advantage, or at least it's not very durable. Other people are getting in the same industry they are. However, something very interesting has happened since 2016. They, for 4 years running now, have managed to increase their margins and are now above my 40% threshold, which means I now again believe this is a really good company. I also believe it's a good company because as we go through this, you're going to see a lot of things have been changing for the better over the last 4 or 5 years. And that's a long enough trend that I consider this to be a stock that's very, very investable, especially when you see the other things that are happening in the bigger picture with this company. So the first thing to do when you look at, so the next thing we look at is the company's earnings. And I look at earnings in 2 ways. I look at them first, what is the gross amount of money that's come in? So, how many millions of dollars did the company make? The second thing is I look at earnings per share because that is what is more likely to affect our stock price directly. But I do look at both issues and I look at them for different reasons. The important thing to note here, let's ignore what happened in 2009 and 10. That probably was more of an accounting issue than anything else. I think those numbers sort of average out to a reasonable year for both of those years. This company was very, very flat from 2010 through about 2014. It went up gradually, enough to be interesting but not exciting. But since 2015, the company's earnings have gone up for 3 out of 5 years and gone up relatively significantly. The earnings per share have gone up more dramatically as the company has bought back shares for the last 4 or 5 years. So what you see here is a company that seems to have solved its problems with its operations and reduced its gross margins. And as they've reduced their gross margins, they've managed to make the profits go up. And so that bodes very well for us as shareholders. This company is going to continue to do well. And they feel like they've got things figured out over the last few years. The next thing that I like to look at is the efficiency that the company has of turning dollars of sales into dollars of profit. It's another way of me figuring out this company's pricing and earnings power. And you can see this company was, sort of in the realm of being a market reasonably, the red line is what my goal is. I like to look at companies that have no less than 20% of their gross revenues converting to earnings. And this company, even back in 2010, was kind of hovering around that line enough that it was interesting as an investment. But in 2014, it took off. It's now better than the top 10% of companies and significantly more so. So this company, when it makes a few dollars, those dollars automatically show directly to the bottom line. And so anything they can do to increase sales is going to be significantly more profit to us as shareholders. The next line, which is net earnings and revenues, just gives you a sense. What's really interesting is that this company has gone from about $100 million in revenues to down to $40 million in revenue range, and yet their profits haven't dramatically changed. That just tells me this management has understood that the world has changed, that they need to do more online, they need to do less hard paper products and printing products, and that they figured out how to make this business work. And so it's very, very exciting as a shareholder to have a company that's got 160 employees that can make $17 million and can do it with no debt. And you can see that for the last really 10 years, the earnings have been relatively flat, although they have gone up, and that the earnings have gone up as well. Another real solid area of improvement for this firm is selling and general administrative. You can see here that selling and general administrative capped as a percentage of gross profit in about 2015, and they were horrible. They were in the bottom 10% of all companies that I look at. However, since then, they've managed to bring that number down dramatically. Now, part of that is because the gross profit has gone up some, but a lot of it is this cost has actually, in total actual dollars, has decreased dramatically. Now, they're not great. They're not in the top 25% of companies, but this is a company that's pretty heavy and intensive on selling and general administrative issues, as you're going to see in a minute. Plants and equipment have peaked, and they were not in the top 25% of companies there in about 2015 also, but they've dropped down to effectively or very close to zero now. And so this company's done a great job with the plants and equipment and done a good job with reducing selling and general administrative costs. So here's where the company gets really interesting, and the thing that really propel this company to great profits to me is the company has no inventory costs, and they have no R&D costs. And when you have neither of those things and you have very low property costs, I've talked a lot of my videos about what I call the 5 taxes. So when you're making a product or selling a service, you got gross revenues, and then you subtract out your costs to produce or generate that product, which are basically not very changeable. And then you have a whole bunch of issues that are what I call the operating taxes. The things that you may or may not have to do. Some businesses have to do a bunch more in some categories, and some businesses do less in some categories. So for example, a pharmaceutical company, they have an ongoing cost for R&D. And a auto manufacturer has an ongoing cost for plants and equipment and factories. If you can get into businesses that don't have those costs, don't have those things siphoning some of the money out of the business, then that's a sign that company can really generate profits for us, the shareholders. And so when you look at those 4 taxes, the first 4 taxes, the selling and general administrative is not great, but not horrible, and it's getting better. Plants and equipment is very, very, very low in the top 10% of companies, and they have 0 R&D, and they have 0 inventory. So that's a fantastic basis for a company. Their operations are in a position that make this thing a very interesting company for me. And the 5th tax, as I always talk about, is interest payments. That's sort of a self-inflicted wound, if you will. If you're borrowing a bunch of money, you're gonna have to pay a bunch of interest, and that's a tax. If your business is such that you don't need a bunch of money and you don't borrow it, then you don't pay any tax. Now, I think in 2020 calendar year, they will pay some tax because they borrowed some money. They borrowed about $10 million, but it's still not enough to change any of my opinions about this company. And it's certainly not enough to change my opinion that this company is very well situated vis-a-vis those 5 operating taxes. So here's sort of the summary of operations. I look for companies with gross margins of at least 40%. I have to have a really good reason to buy a company with operations below that. This company's gross margins have been increasing dramatically every year since 2016, and they are now above the 40% threshold, so that's fantastic. The company's earnings have been increasing every year since 2015 on both a total earnings and an earnings per share basis. So again, that's very excellent. The company's drastically reduced its selling and general administrative, and its property, plants, and equipment number is down to almost 0. The company has no R&D or inventory costs, and there's no real debt, and thus there is no real interest. So from an operations point of view, you can understand that this company seems to be very solid, seems to be very interesting. The numbers are going in the right direction, the costs are going in the right direction, and I think that's a really good sign that this company's a good investment, which is why I've suggested you should buy it. If you pay attention, you'll see that these videos that I do are typically done after I've bought the stock. I typically decide I'm going to do my research, decide I'm going to buy the stock, I buy the stock, and then I make videos over the next few days on the stock. So you're always trailing me a little bit of the market. If you want to make trades with me in real time, the right way to do that is to follow me on Twitter, because I do post, as soon as a trade is confirmed, I post on Twitter what I bought and at what price. I do the same thing for things I'm going to sell. I also don't always make videos when I buy something. If I'm buying a stock that I've already made a video on, I'll just buy the stock and just put a tweet about that I did. So, if you want to know in real time what I'm doing, follow me at my Twitter handle is @RobinsonStocks. I also will put information on when I'm posting videos, and I will put new thoughts and articles and videos that I read, books that I think are good, anything that might make sense to share with you guys. I'll also put that on Twitter. Finally, you see here a map of the world. These are where my known subscribers are. And I got a real kick out of seeing people following me from all over the world. It's really kind of neat. So wherever you're from, if you've got a second, just type down in the comments, hey, I'm in Denver or Istanbul or wherever you're from, and I'll put a dot on the map for you, and hopefully I'll fill this thing up. Thank you very much for your time, and we'll talk to you tomorrow about the company's financial balance sheet.